Our guest today, Phil Brown, sees disclosure a little bit differently than us disclosure lawyers because he's been in the disclosure intelligence field for over 35 years, starting with the co-founding Global Securities Information, which was sold to become eventually Intelligize. Phil served as the CEO for Intelligize for a while, and now is the co-host of a podcast called A Record of My Father today on realtransparentdisclosure.com. My guest today, Phil Brown, I've known many, many years. Phil, you might not be aware of this, but I was at the SEC in '88, and of course, I wouldn't have heard of Global Securities Information there because even though you were in the building or you had your people in the building constantly retrieving microfiche, I just didn't have use of your services. But when I went to a law firm in 1990, we did use you, and so GSI was on everyone's radar, and that was a thing. But of course, that was a long time ago, but people do know Intelligize. So you are
Yeah.
also the Intelligize guy, and so they should know you from that. So you have a unique perspective about disclosure compared to us regular disclosure lawyers because, well, when you've been in the field so long, but also you
I'm old. Thank
you've
you.
touched so much. You've touched more disclosure probably than anyone I know because of your background. So can you explain to us how even you got into the disclosure research field?
Uh, it's kind of funny. It's kind of dumb luck. I was looking for a job. My first job out of college, and I got a position with a company called Charles E. Simon and Company. The way I got it was I'd actually worked a lot of construction, and the guy that was the head of HR at that time was building a house. So I talked to him for 3 hours on how to do a form, how to do a footer, and and then I had to ask him, did I have to get the job? And I did get the job. And then I started to work there. And I started, you posed this question to me and I thought about it. It's like I had three mentors. I had Paul Richter, Phil Grisdella were like, when you came on board at Charles E. Simon, they trained you. They like quizzed me on the forms. What's a 14D1? What's a 14D9? What's the time period to respond to a tender offer? What's a 13E3? What's a 13E4? What's a 45B pause? What can be included in it? Is there SOA, an SOI, statement of additional information? Is there this? Is there that? So I learned all that, wrote, but then I had in my research, there was a person, Nadine Greenspan, who was the manager at the time, and we would retrieve documents. And this is before anything was online, so we were retrieving things from the files in the bowels of the SEC. It was the public reference room. We would go to the shelves, we'd pull the documents out that were just last filed. We would go to the microfiche drawers for more historical information. And she said this one thing. She said, well, you can pull the documents, you can take them over. We had a copier. We had a person that copied for us. And, you can read the document. And it was just sort of like that little thing was just like, well, you're sitting there in line and you're waiting and you're holding a 10Q. And it's like, well, look at the cover. What's the cover say? Well, it says the period date. Well, it says the date it was filed in the upper right-hand corner. Well, it has a file number. It has the full name of the company. It has the corporate headquarters. It has the shares outstanding. It has the market cap. It has the securities listed on exchanges. All these things are right there. And if you start looking at documents repetitively, and then, hey, open it up, hey, hold the thickness of a 10Q. Everyone knows that at that time, the thickness of a 10Q, an 8K. An 8K is important if it's fat, because it has documents, it has a credit agreement, it has an indenture attached to it. And those are the different things. And the thing that's how I got introduced to it. And also every day the Wall Street Journal was our Bible then, because it was about everything that was business related happened there. And you had that business column down the left-hand side, so you could see all the deals. And the thing I think that it was more of being part of something. You were a cog, like a little tiny cog. I mean, I was making 15K a year. I wasn't like Mr. Richie Rich guy on Wall Street, but we were interacting with the people that bought securities for Boski. We were 2 steps away from the biggest insider trading case the SEC ever settled. We would be involved. People would call and say they were looking for leverage buyouts in a specific industry. You would know that if it was in the railroad industry, you would know who was in play at that time. I mean, these were the kind of things. And then you would read a story the next day on the Wall Street Journal. So it was sort of like, wow, you're right in the center of the whole financial, you're the very first point of dissemination of information into the capital markets, because it all comes together there. You had the public companies filing on one side, you had the lawyers reading it on the other side, you had the shareholder activists, you had the takeover artists. Everybody was looking on the public referencer. There was 100 people there that were pulling documents, copying documents. There were people that looked at people's refile pile. We had takeover law firms that were saying they would be interested in, say, Lockheed, but then they would have you pull 5 companies' 10Qs because they knew that Brock comes over and looks at my refile and he tells his customers, Boesky or whoever the arb trader was of the day, Kidder Peabody, Kellner DeLeo, you would tell them what was in the refile. And then they would just say, oh my gosh, yeah, Nike's on the list. That's the one. We think they're going after them. And then they buy a position, So there was all sorts of that kind of periphery going on, but it was exciting. And you had to think, and you could go through it rotely and do nothing and learn nothing. And I think that, you can do that in just about not any job, many jobs. You can do that as more of a robot. Hey, you said get the most recent 10Q. You said get this. And I remember the look of Nadine when I went to the file and I pulled out the only 10Q that was there, walked over and go to copy it. And then I didn't look at the cover. And she looks and she goes, did you check the date? And I looked and it was like the previous quarter. It just hadn't been it hadn't been put in the bucket yet. And I was just like, that sense of attention to detail and multiple different tasks, because I'm probably a lot ADHD. I like to do a lot of different things. So you would have Skadden would have a request, Cravath would have a request, Sullivan Cromwell would have a request, Boesky would have a request. You had all sorts of different people converging, looking for that information. And then it sort of grew, because the more you looked into the documents, the more you learned the structure of the documents, and more you learned that, to skip past the boilerplate. Like when you look at a 13D, you would go immediately to item 4. Or first, you want to see who's filing. Because if it was the Bass brothers or someone that was a known takeover person, bing, you got a hit. You got a 35-page document. You've got minutes to basically figure out where the important information is. You can buzz through, go to item 4 and say, hey, look for the keywords. What are they? We will seek control, or there's an item and it's like A, B, or C, something within item 4 of 13, the Williams Act at that time, right, was whether or not you would seek control of the company, and they would put that down. And then that was a harbinger that the company's stock price was going to move up substantially. And then you go to the trades to see if they were serious. Like, how long have they been buying this stock? 2 days, 20 days? What kind of prices have they been paying? And then that was like the arbitrator. And then there's the other thing was needle in a haystack. I mean, I've got so many weird stories. I remember, I'm trying to remember, it was one of the takeover individuals at the time, very big, out of Nevada, Armenian. I can't remember his name, but and he went after General Motors. And General Motors at that time, people were looking at the articles and bylaws, and you want to making sure that they didn't have a classified board, or they didn't have green mail provisions. They didn't have anything like that could stop me from putting my individuals on the board of directors, so I can gain control of the company, so then I could have it do what I wanted to do to maximize my value in the company. Well, they had a board meeting and they changed the bylaws and they added classified board to it. And I think it was the bylaws. And they attached it to a Form S8 because it was in between reporting periods. They didn't file an 8K. But S8 was their idea that satisfied the disclosure requirements. And I thought it was the sneakiest thing. Well, they missed it. The takeover artist missed it because they used another service. And it was like, and then they came to us afterward because they got hammered. They were going to go in and, well, yeah, you can put a slate of directors in, but so what? You get 3 out of 12. We don't care. So I thought that was really neat. And I think that sort of played to my idea, looking where others don't. I mean, why would you look at an S8 for new bylaws of a company? It just didn't, it wasn't logical. So that, and most of the people that I worked with on the other end of the phone were intelligent. I mean, like above average intelligence. They knew search or research because they've been doing it for years. And I was like the neophyte, whatever. So I would know that if you called me, that you know 10Ks, you know how to find articles and bylaws. You've already looked where all the obvious places. You went to the 34 Act and you looked at subsequently previous to that, you looked at every 8K, you looked at the 10Q, you looked at the reference to where they were, and you looked at all that stuff. So in my mind, I would be looking for weird stuff. You know, why is this at 8K 200 this S8 200 pages? That makes no sense. That you wouldn't have that. It would be usually they're much smaller documents. So, just noticing irregularities in the way documents are filed and then what the content was. And those were the things. And that sort of like was I like to search for things and I get the satisfaction of finding it. It's just cool. And then, and that spreads to examples, like when you're looking for things. Because in the early days, remember, there's no database to search. I think Securities Data came out with a database in the late 80s at the time to search, but it was incredibly expensive. At the time, if you were, say, you were an attorney at a Skadden or Cravath or one of the law firms, one of the big law firms, and you're going to go public, you're looking for, and Goldman's the underwriter, and they're arguing about a reps and warranties that they never give any. We never indemnify the selling shareholders. And so then they would say, can you find something where an underwriting agreement, preferably with Goldman, where the selling securities, because at the time everybody would say, it's market, this is what it is, and it's like you had to prove otherwise. And I was the guy that proved otherwise, and it was always like trying to find the needle in the haystack. I mean, I had a good story later when we had launched Live Edgar, and the database and the documents became searchable. It was one of the big, I think it was the big eight at the time. It might have been Ernst and Winnie, Arthur Young. There used to be 8 big accounting firms. Now there's only 4. But at the time, they were representing a company that was going public. And it turned out that the CEO was a convicted felon. And they were the auditor. And they're like, we have never represented a company that's gone public where any of the officers were convicted felons. Well, we disproved that. And the reason they were doing it is not that they were not gonna crap the deal out. I just want more money. Just pay me more because this is more liability on my side. So we're just going to have to double or triple the fee. And then I come back with 3 examples in the last 18 months where they, in fact, did exactly that. So they shut up and moved on. And then when you've been proved wrong, you're in weakness. So then that gave the opposing counsel, well, you were wrong before. Why would we trust you now, bro? So your questions become a little easier to answer after that. So it was a negotiating tactic. And this happened just, thousands of times in my career where you saw deals that started and were going to be troublesome. And then, and the weird, and people would disclose things to us that they shouldn't disclose. There's a hostile tender offer going on, and they're like, we're going to get them. We're going to do an LBO. We're going to do it at 50. And you're like, why are you telling me that? I don't buy, I never bought securities. Never. I had mutual funds and I stayed out of it. And I was like, you could. And it's like, yeah, you could go to jail. It's also, to me, and this is a weird thing, it's cheating. I don't want to win by cheating, because then it's not winning. It's not the same. So that's just my own weird morality, whatever the case may be. But I think back to that, and it was so getting something hard. We would get things that people wanted to do. They would have new weird things. What was it? Remember when you look back to the banks got in trouble in the late 80s, and they wanted to sever their bad debt into a separate trust, a liquidating trust. So essentially what it is 50% of our assets are underwater. What I want to do is take those 50 and put them in another trust and then keep the rest of ourselves whole and make us not liable for that. And you think like, well, that's kind of, you can't do that. Well, you could, because it had been done before. And that's what everybody was looking for, was some semblance of how things had been done. I think it was Mellon Bank was the deal then, but I found a liquidating trust that actually separated. And it was a smaller bank, but it was still the idea that you guys passed muster on it and said it was okay. And that was the thing. If we found it at the SEC public reference room, it had already passed. It already passed review, so it was okay. It was a good deal. You know, it's like precedent in when you're searching for legal cases. Well, this is the precedent now because this is what they said, and this is and those that be in control say that this is an okay example. And I just I get passionate about it because there's so many different little nuances and deals and the people, and I would talk to them, and you get and it's kind of like wired my whole life the way I would go through, and I'd visit the customers and over time and interact with them, and they would always talk about their hardest research request and how they did this and this and this, and I had just so many different unusual circumstances that like just all over, and that excites me, and which is a little weird. And I mean, at first, I really liked the idea of looking into debt and seeing how debt was structured and how debt controlled the market and how debt was like, what, 50 times the size of what equity is. And everybody's looking at equity, but they don't look at the debt side of the marketplace. Watching the early 90s when it took off, or the late 80s, it took off with Milken. When they were taking the companies private, I remember that, just watching 11.5% bonds and senior subordinated notes and all that kind of stuff like that. And then you'd look for the sinking fund and how much it would cover of the actual debt offering that was out there, when it would be due, could they put the debt back, all these different provisions within the indenture, within the prospectus itself. And in a debt issuance, the prospectus and the indenture last for the life of the bond, but in an equity offering, they're dead by the time the first 10 Ks filed. They're inconsequential because it's changed. Everything's changed. The summary of the company, everything. Well, it doesn't change. It changes minorly, but if you want to look at what a company's doing today, you still have to look at the debt. And you think back, like law firms doing due diligence on 2 acquisition targets, or a company acquiring another target. They have to look at all your agreements, and they're looking at your credit agreements, and they go back 20 years. Well, when were they filed? Well, I know it's due in 2005. Well, so I would just take 20 years off and say, well, it was issued around that time frame. And then, you look on a computer and you look at the list of documents there, and that an indenture is going to be attached to a certain type of form types. And then you look for page counts and go like, wow, this 8K has 240 pages. Well, that's indenture because it's right around the date. And that's the price, terms, and conditions of the deal for the life of the deal, unless it's amended. So that was why it was so important. And if you're buying a company, you want to find out in each and every one of those agreements how it's going to affect you going forward. And one of the biggest clauses, and I found this out probably about it, it's quite a bit later, was the assignment clause, is whether or not you could assign it. Is it a signable agreement or non-assignable agreement? Because if you and I enter into agreement and then I get bought and then it's not assignable, then you're going to have to come back to them, who you don't know who they are, and they may be a competitor. Are they going to be negotiate? And they're going to negotiate and they'll raise the price 50%, and then it will make no sense. So there's just so many different things. Licensing agreements. I remember sports figures. There were sports figure PR firms that used us to find out if anybody was stealing their intellectual property. And the way they would do it is just to see if, public companies would say, we launched a new Michael Jordan basketball card, or whatever the heck it was. And you'd be like, and they're like, well, they didn't talk to us. We didn't hear anything about that. So there's so many different angles that you could look at when you could look at public information, and you could apply it to all of the private places of the world. Gosh, I talk a lot, don't I?
Well, it's fascinating. So, as a
Yeah.
transparency champion, and it's interesting that you talk about PageCom because in the old days, the disclosure requirements did not elicit a lot of disclosure. And so, when there was a significant amount of disclosure, as you said, that was a flag that something was different. Whereas today, with the disclosure requirements perhaps being too voluminous and coming from multiple sources, it's not just the SEC. You've got the stock exchanges, you've got demands from the proxy advisors and institutional investors themselves. The page count
It doesn't
probably
do the
isn't,
same.
yeah,
A
it's not
proxy was 22
there.
pages tops in the late 80s and the 90s, and it was officers, directors, and if it was a little bit longer, then you knew they voted on something that was material to the company. You didn't even have to look at the document. You could just look at it. It's 13 pages long. They didn't amend anything. It's not in there. It's not fat enough. But that's not 100% correct, but that's almost always correct. And if you're looking at 1,000 documents, that's a very quick way to pan through it and look to what's important. So page counts today, no, I don't think so. Now it's search capability and knowing how to structure the search, where the words are. And I mean, that was one of the things that we got really good at Global Securities Information in the early days, is like, well, how do you search the page of a credit agreement that's attached to a document of say, a 500-page document or a 1,000-page document, and you only want to search the cover page of the credit agreement? Well, we determined that about 99% of the time, every exhibit that was attached to a document in the upper left, upper right hand corner had the word exhibit. So if you just did exhibit P35 to the name, whether you wanted to be a certain bank, whether you wanted to be you wanted to have certain terms, or proceeds 500 by, you would write in the different words and the different things that would apply to your particular needs or your use case. So those were little things that how you learn the structure of a document. And then you start to find that most people are interested in only certain sections. They skip the boilerplate because you give them the boilerplate in the rule. And actually, I found that the more I read the rules, the deeper the rules were. Most law firms, or the cutting edge law firms that would do things in securities, would give you ideas on how to write that first page. And then and when I say you, Brock, I mean the SEC, when they're issuing a new rule, they would give an example. And then the very first one that came out at the SEC was basically a copy of that with a few things here and there. And then people would take that and they would apply it to theirs. And that's how disclosure kind of grew. I really, I thought it was a really neat process. I still do think it's a great process. It's the question is how much, how important, and how important to who is some of the problems that happens with disclosure is that, the loudest guy in the room gets the most attention, unfortunately. And it's not always something that actually matters to companies, or it may matter, but it doesn't necessarily, is it reportable? Is material to their outcome? And those are the kind of things that you have to look at. And on the surface, it may not be, but if you start to look at it in studies over time, you find out that it is. It affects the stock price. If there's certain things that you do in a public company that make it more competitive than others, if you can lower your labor costs, if you can have more ideas from a much broader view of people, of humanity coming into you, that gives you a better ability to address all of your market as opposed to just certain sections, things like that, yeah. But is it the regulatory community's idea that they have to, it's our job to mandate that? And it's like, if it affects the stock price, yeah, right? Isn't that it? If it's material, and then materiality is always like a funny little fuzzy word. Like, what does that mean? I mean, I remember looking for an agreement. Kidder Peabody was bought by General Electric in 87 or 88. I don't remember. Might be a year off there, and anybody can look and say me I'm wrong. But everybody wanted to see the merger agreement. Peter Peabody was $680 million. It was not a small deal, but they were bought by General Electric, which was, I don't know. Well, I don't remember the market cap at the time, but they have to, it's material. Well, they didn't. They never filed an 8K merger, never filed an agreement with that. I looked at that deal 20 times from different law firms, and they would say they had to, it's required, it's material. And they didn't, because if you looked at the amount that they paid for it, and you looked at General Electric's market cap at the time, it was under the 5% threshold. You would say it was material because it was a new business line. I would have argued it was material. You guys didn't make them do it, so it never got filed. And people would always say, yeah, it has to be filed. I'm like, you can pay me to look again at all the documents that I've looked at, every single one on both sides, everywhere. I'll do that, and I'll put a check mark by them, and I'll show you that it's not there. Okay.
So, I mean, this is a good segue into talking about AI and how that might impact the disclosure research field, because a lawyer's ability to craft the proper prompts, the proper search on AI impacts the results they get. It'll be interesting to see how AI, you could put in a search and say, is this disclosure material in the context of this company's overall business, and have AI assist you in a materiality determination. I don't know if we'll ever get there, but I think that
we will.
Might be one place
but
to
I think
do that research.
That on the positive side, it makes things AI writes significantly better than me or most people I know. The summaries are just amazing and just sound totally convincing. The issues are usually in the nuance, and this is what I see in the future. I see that it's kind of like we used to do data extraction and entry, and we had 50 people that pulled data points out of public offerings and everything to build a database. And the accuracy was really high, but we did not do the maximum. We didn't do double S&P CompuStat. If you remember at the time, they used to take financial statements and they would have me entering in an income statement, you on the other side entering in an income. Double blind entry was considered the best you could get. And then you could still get an error, but not always. And I think but that costs a lot of money. That's to get to that level of quality and perfection. And I think that when you look at AI, we're in the early stages where it's mostly right. And as we keep moving up the accuracy and quality level, it's going to cost more and more and more. And in each iteration, the new guy on the block is going to have an advantage because he hasn't spent millions and billions of dollars trying to get to the 95% accuracy. He comes in using your search or your ability, and he drops in and goes to 96, 97. And then the next guy comes in. And I've seen this over and over and over in industries. We look at the way the internet grew. When you look at the original browsers that came out in 94 and 95, 96, like Excite, Netscape, what was the other one? Northern Lights was another one. Really good browsers. But you ever heard of them? Google came along in 98, so way after the time, and was a better algorithm, and it answered your questions more directly and more accurately than anything in the marketplace, and it just ate it alive. It's like, you can argue in the nuances of how and why, and I think that what we're seeing with AI, artificial intelligence, is the fact that we've gotten to at first it was scary because that was search in the beginning. I'm pretty sure. Now I'm mostly sure. I'm almost positive, and it's going to be moving up the ladder to accuracy, and it's going to get to the 99.9 percentile. But as I've said to many people, and I had my tech guy say to me that, we used to do OCR, and then we put the data in, and then it was 99% accurate. And he goes, well, there's 2,000 characters on a page, so if it's 99% accurate, you could have what is that? 20 errors? Up to, and an error can just be a period one step over, and most of them are inconsequential, but and then you always say the word will not, The difference between not and no not is 3 letters. So and not totally changes the meaning of a paragraph. It totally, so it's just little things like that 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 worry you on accuracy. I mean, you look at I think we had a discussion about what was it? Was it Skadden that did the deal with Citibank where they had a $7.8 million payment to Revlon? I think I can't remember the payment, and they actually paid off the whole loan, and it was user error. It was a person. They said a person's error, and you think like that's the kind of thing that AI could make correct. I think that simple data points and simple, you can look at me and say, give me every single dollar amount of every bond issuance for the last 30 years, and I couldn't even come close. But a machine could do that immediately and accurately. So you think about like certain things it's going to do significantly better than we've ever been able to do to look at the whole world. The thing when you look at the whole pie, because I remember this in the 80s when people were like, I want you to look at everything. And I'd be like, well, there's 8 million documents. I've got 20 people in my firm. We could probably search this for 6 months. That would cost you $5 million to find this clause in your underwriting. Is that seem? No, I don't mean everything. I mean most everything. I'm like, how about I just look for consequential stuff? And I decide what that is randomly because I know, things like that.
Yeah.
You look for ways to cut down the world. And now we have this thing that can search the whole world, provided all of the information of the world is there. And I think that, that's why you see legal minds not wanting to be interviewed and have all of their thoughts put online, because then, well, I don't need brilliant legal minds anymore, and you take away intuition, you take away certain things like that. I think that the latter stages are going to be about nuance. And have you ever made a decision? You ever made a decision where 80% of the chance or 90% was a stupid idea, but you did it anyway? Think about that in your lifetime. And if you had artificial intelligence, it would tell you not to make that decision because no one would ever start a restaurant again. I think 99.4% fail within the first year. I mean, if you start to look at things like that, it's like, well, and maybe it's how you view it and the lens that you view it through. Each one of those will get better and better as time goes on. I was involved in a recent searching for new products and evaluating products through AI and the terminology and how they came out with their statistics. And I would say that they're presented really good. But it lacks in how do I say, without disclosing what it was and how it was, I was surprised that they would look at a market and say that you invest in stocks. Everybody buys something in the stock market. So you as an investor, the market size is $1 billion. There's 300,000 people that invest in this market. All of them, there's 150,000 with over 1 million in net worth or whatever the case may be. Those people would buy a tool. And just those assumptions were sort of like, well, where does that come from? I mean, and then without looking at how many services were free and what were the percentages that those free services that people would go to with that before they'd even use yours. And then what were the 3 things that you could find that that you could beat the competition on? Because that's always the way that I've always evaluated products, is that I'm an idea guy, and then I pitch to people. And if you say it's wrong and I can't change your mind, then I would never develop it. Because I have to give my salesperson a defense, because he's going to come up against somebody like you who's really smart and knows what he's doing, and he's going to have a defense. You're going to say, well, it doesn't do this. No, it doesn't, but it does this. You have to have an answer. And those are the way that you grow a product. That's the way you sell a product, at least. And that's why I know a little bit about product marketing, sales, and everything. I don't know a lot about anything. So, which is good and bad.
So once you left running Intelligize, what have you been doing since then?
Oh, well, as an old person, It was just at the end of COVID. Traveled, heavy travel. My kid came up with an idea that is, you can probably tell by now that I'm a pontificator. I like to, I have a million little stories and I've told all of them. And he said, we should do a podcast, and it's called A Record of My Father. And we'll just sit down and we'll talk for a half an hour on a topic. And I've done everything from mattresses to, I did the acquisition because I was one of the top individuals when we sold Global Securities Information at Thompson. So I had an inside view on, what was the aftermath, what made you do it, that kind of stuff. And also when Intelligize, they got sold to Lexus. So I've been in the inner circle on the decision making and what was the aftermath. And people just want to hear, how did Thompson do it wrong? What did Lexus do? And it was like, I don't kind of view life on all the things that did wrong. It's like all the things I learned when I was at each place and how it's made me like, I want my mind to get bigger, not smaller, So when you come in and you see a situation and you see how you reacted to it and it turned out bad, it's like, I can certainly blame everything on the other guy, but I also have to look at myself and say, well, is there something you could have done that could have changed that? Can you just shift a little to the right and get them on your side? Because if you can get someone that hates you on your side, life is a wonderful place, And I think that, sadly, we don't have politicians that do that. And no, we won't go into that. is to try to find that thing that the things that are important to you. And it comes down to one of my weaknesses, and it's listening. But the podcast has been, I think we're at 95 episodes. So, and it's, I'll tout it one more time, a record of myfather.com. We're on Spotify.
And there's a link to
and all
that
the different places.
in the notes to this
Yeah.
blog, to this.
So what about you? You do everything.
Yeah, as I get older, I try to think back, and I don't regret anything in my life. I just learned from my mistakes, from my failures. And you're right, AI might not cause you to take those risks. Ask that person out that all the indicators are is that that's a bad idea, but then you might be pleasantly surprised. In my career, I've certainly taken a number of risks, and the failures are the ones that led me to try then something else. Leaving a law firm the first time I left a law firm back in the 90s, to try an entrepreneurial thing, and the entrepreneurial thing flamed out. But that led me to go back to the SEC, and the internet hit, and that propelled me into what I'm doing today. And like you can tell from your voice that you've loved your career, and I certainly love mine. And not that I wouldn't have loved staying in a law firm my whole career, but who knows? You just don't know. But
It's
I know
easier.
what I did experience, and it's been great.
You find a certain solace in something that you know what to do and how to do it on a daily basis. I did the same flame out on. I started a company called Conflicts Authority, and that was after Global Securities Information and before Intelligize. And because I had a number of people tell me that conflict searching, and for those of you who don't know what conflict searching is, it's you get a new customer, you want to find out if your existing customers are on the other side of a battle suing this guy or this woman or whatever the case, this company. So you check them against all your current and there was only one product in the marketplace at the time. It was, I think it was it Standard & Poor's was the big product at the time. It was really expensive. It was really clunky, and everybody hated it. And that's the kind of market that I like to go into. I like to go into a market where there's one or two key leaders. They're making tons of money. The people that are using the product hate it, but they don't have a better choice. And those are the kind of markets to enter. And I entered, and then I realized that, and law firms told me what they spent on conflict. So I had an idea of what the market size was. But the product that I was developing was only going to address a small subset of that dollar. And so at the end, after about 18 or 20 months, they were like, pivot, you can do this. And I'm like, yeah, but that's a market that people like, the product they're using. And I don't like to compete in a market where everybody likes what they're using, because that to me is, why are you going to change? And when you ever tell someone that you want to change a product, don't go to price. Price to me is like, no, I'm not Walmart. I won't. And no offense to Walmart on that, but that's their strategy. I'm not that big of a thinker. I'm more of a. I want to. My advantage is you already don't like the guy that you buy from. You already pay too much. And I can get close to that price and make a lot of money, but make a much better product. And that to me that's easy now.
That's a great name, Conflicts Authority. I would have wanted a T-shirt from that.
Yeah, I had so many people. Are you going to do it again? When are you going to come out with a product? I'm like,
Release a
sorry.
T-shirt.
Yeah.
Thank you so much, Phil. This has been fascinating. It's great stuff, and I learned a lot. And I'm always up to learn.
Wonderful.
Thanks.
Wow. Thank
Enjoy.
you. Cheers.